What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. It's a blessing to be with you again. Feeling a little better. Hey, we have a lot of data to get into, but before we do that, hit the like, subscribe, and notification bell if you're new. And if you have been rolling with me, let's get the likes up on this video. I'm going to hit you with a lot of information. You want to watch this video to the end. But first, I don't have a Telegram or WhatsApp. I don't invest anybody's money, so don't fall for spam in the comment section. And if they were going, oh, you should be doing this, you should be buying this, never fall for that. It's not me, okay? Even if they use my likeness or my face or my name, it's not me, it's spam. Hey, let's get right into all of the data that I see going on, and then we'll talk about some other things right in the middle. So, a lot of data has come out, and I'm going to shout out two other influencers. One is Stocks with Josh, because he is really good with technical analysis, and I'm actually going to shout out Stock Curry. I looked at his video from yesterday, and a lot of key things. I'm going to play a little bit of Josh's because I have his permission. I'm just going to go over some things that both of these gentlemen talked about, and some things that I was looking at, and everything kind of lines up. So if you got three different guys and we see everything the same, kind of want to pay a little attention to that, okay? So let's go right into what we're looking at right now. This is some of the stuff that is coming out today. Of course, this is a CNBC, and it says shrinking profits. Strategists are again starting to reduce 2023 earnings. Reduce 2023 earnings. What have I been talking about? A earnings recession and a weaker, lowering their earnings. And earnings are actually coming down, which means the entire stock market, the PE of the entire stock market will actually have to come down too, because earnings are coming down. Okay? Remember what EPS is. I want you to Google that. All right? Earnings per share. Right? So if the entire earnings is coming down, then that means that the PEs have to come down. The price to earnings have to come down. The overall stock market, the overall S&P has to come down. Okay, so let's look at what else is happening here. So this is I snapshot this on my phone, and as you can see, earnings shrinking fast. 2023 S&P 500 EPS. I was just talking about that. Estimates. And as you could see, December 1, January 1, and today as we go down, as you could see, there's a shrinkage. For those of you that watch Seinfeld, you'll get that. All right, so let's keep it going. I also want you to see this. This just hit the market today. Mortgage rate jumped back over 7% as inflation fears drive yields higher. Now, this is one of the things that Stock Curry was talking about as far as yields. And I was mentioning on yesterday's video and previous videos. Let me go back to my phone snapshot. So as you can see here, at the time of recording this, let's look at the 10-year. All right. These are treasury. These are treasury bonds. OK, the 10-year is paying 4%. Now, generally, when the treasury yields are paying as much as 4% for the 10-year. What does that mean? That means that people will be fleeing the stock market and going into bonds because there's safety. You have low risk when you can make 4%. And it hit it yesterday, and then it fell slightly back under, and now today it's back to 4%. When you could make that in bond yields, you can. It's not a 100% guarantee, but it's way less risk than the stock market. So what does big money do? They pull money out of the stock market and go into the bond market. Okay, you do know that over 80% of all of the stocks traded are by institutions, right? So what do you think is going to happen to the rest of the rest of the stock market? It tends to fall. Now remember, I just showed you this also about the mortgage rates. So what is that going to do? I'm sorry to tell you, it's going to put brakes on how many houses are getting sold, both new builds and existing homes, because it's harder to get approved. Now we're back up. The housing market started to look better now. Sales had started to actually go up, but at the same time, because of higher interest rates, now we're back up over 7%. And if 18 months ago you could have got 2.5% on, as far as APR on your mortgage, 2.5, and now it's 7%. Now, that's going to close out a lot of young purchasers. That is a deal breaker. And then now you have the housing a mess again. Okay. Now, this is not 2008. We're not going to be anywhere close to 2008. So let's go to what Stocks with Josh was saying. So I wanted to shout out Stock Curry because he is a good fundamental and techno analysis guy. But our guy, CNBC has their chart master. Our chart master here is Stocks with Josh. I'm going to play a snippet of a video that he made on yesterday.
Okay, super quick technical analysis of the S&P 500 today. Two things that I want you guys to see. Yesterday, I told you that the smart money said that a close below 39.40 would cause a technical sell-off in the markets. And what happened this morning? We came down and kissed that ominous level, and then we've been slowly climbing. Now, we are currently sitting at 39.50 while I'm making this video, and that's the level that I gave you guys that we do not want to close below on the daily chart. So the point that I want you guys to see is that we are getting very, very close to a potential explosive reactive moment in the markets. Today or tomorrow morning will potentially reveal if March is going to be the bull rally extension month or whether it's going to be the crash and burn month. Now, I've got bullish and bearish trades set up, so I am prepared either way, or at least I will make and potentially lose some money in March. I'm getting myself positioned. The second chart that I want you guys to keep your eye on is the monthly chart of the S&P 500 as measured by the SPX, which means that each candle that you see on the chart is a full month in the market. February's candle touched the key fib level that coincided with the 4,200 range, and it got clearly rejected. It's got a slightly taller wick than a body, which means that the bears beat it down when it got to the 4,200 level. And what I want to point out to you guys is the candle that we've begun for the month of March is positioned in the middle of the risk range. I think that February's candle was mostly bearish, even though it was green, due to the size of the wick and its position up against that key technical level. I still think that we are likely to digest a move up to 4,100 before the harder sell-off could begin. Timing is everything in trading. So I want to be clear. This is what I'm watching out for.
Now, remember that video was yesterday from Stocks with Josh. So pay attention to those key levels in the S&P 500. Shout out to Stocks with Josh. CNBC came out with his guy. His guy came out and said this after Josh had already said it. That's my guy. This market is so hard to predict because one of the things that we have learned this year is the market is strong and resilient. Is very strong and resilient in spite of this bad news. Now, I'm going to switch and go to Tesla Investors Day, which was a big sleep fest. And then I'm going to hit you without, and then I'm going to talk about some key data points as pertains to the S&P and the Dow. Okay. First, I want to talk about the two links. You remember how Josh was talking about the size of the candlesticks and that type of deal? He has a chapter in my class, which is the top link below, and he's teaching us about the candles and what the candles represent. There will be another lesson released this coming Monday from Josh's chapter. Okay, so click the top link below, and then let's talk about Webull. Get up to 17 free stock with Webull, depending on your deposit amount. If you deposit $100, you can get up to 7 free stock with just $100. Let's talk about Tesla. Tesla was a major sleeper sale. I can just sum up Tesla's investor day real easy. It was a big nothing burger. lower costs, higher volume, gigafactory in Mexico, and demand remains strong. That was it. That's all. Just those three major things. Demand remains strong, the gigafactory in Mexico, and lower cost, higher volume. Anything new? Nope. Same stuff we already knew. And so now look, the Dow is up now 269 points. The S&P is up 16 points and the NASDAQ 35 points. And this is to show you how difficult it is to trade in this environment. Though we have long-term bad news, short-term, the market just continues to run. Here we go again. Short-term, everything is looking bullish. So what are we doing here at Stock Up? We are simply trading the market that we're in, right? We're trading the market that we're in. And so I'm making some short-term plays. I have re-entered into ticker symbol EOG again, which is energy. And I have re-entered in to that play. A lot of you guys were asking me about that on yesterday. And today I re-entered into some positions. And we will see what's going to happen from there. Now, I'm looking at EOG. I'm doing an option. I'm looking at the March 24th option and strike price at 123. I'm trying to catch it for 250-ish, okay? And then I'm also looking at the April 6th for 125, right? I'm trying to catch it at about 340-ish, okay? So that's what I'm looking at today. Let me know if anything I said has shined a light on where we are now and where we're heading, okay? So remember, let's keep an ear and eye on these earnings. As they become less and less, that means that the overall stock market has to come down also. Hey, make sure you check out those two links below. A lot of people are enjoying the class, learning a lot of things. Stocks with Josh Technical, his second lesson will come out this Monday. And then we are going to start time releasing Kenan Grace's options class. And then I am going to be doing a momentum options class, but I'm going to trade over a 2-week period and show you guys some live trades in there too. All right. We will talk to you later. Live, love, laugh, and learn. Make sure you hit that notification bell.